Why is banking as a service so hot right now?
Yeah, that's completely true. Every company is striving to become a fintech company.
I think the demand for instant gratification is because we live in a digital world today.
Hello everyone, my name is Adam Davis and welcome to episode 8 of the 11FS Newsroom. In this weekly show we take a deep dive into the biggest news stories of the week just gone, and don't forget to give us a follow on LinkedIn so you never miss an episode. What you just saw was the trailer of our new documentary series about banking as a service. The first episode was released last week, so subscribe to our YouTube channel so you never miss an episode. Go to http://bit.ly/decoding BAS to find out more. Today we're talking about the consultation launched by the open banking implementation entity on variable recurring payments and sweeping. All right, so this represents the next stage in the development of open banking in the UK. Really super exciting and a pretty big deal. And today, to talk through more on this and what it means for the payments industry as a whole, we're joined by Mike Kelly, who's the product lead for VRP for open banking. I got all that out. I'm impressed. Impressed with myself. Mike, how are you doing?
I'm doing great. Thanks, Adam. Thanks for having me.
No, pleasure. Great to have you on. Where are you dialing in from, by the way, which we didn't talk about pre-show?
So I live in Winchester. I'm just down the road from London.
Cool. All right. Nice one. Look, as always, we love getting your questions. Send them in, leave them in the comments bar, and we'll get them asked to Mike live on the show. So just as a starter for 10, I guess, Mike, do you want to give a little bit of a background to yourself, what you do, I guess, as a day job, and then how you got involved with the OBIE?
Yeah. So my name is Mike Kelly. By trade, I'm a software engineer and a product designer. Most recently, I'm the founder of a startup called Curl, which is a venture-funded business trying to build a new kind of payment network around bank APIs. But most recently and most relevant to the news story that you mentioned at the start was that I'm a product owner for VRP and sweeping at Open Banking. So I've been helping the team deliver 2 consultation papers and some technical specifications that form the basis for a standard on VRP, and also a form of access under VRP that's referred to as sweeping, or for use cases referred to as sweeping.
Cool. And I guess for those of people who don't know the OBIE, or I guess the role that it's played within open banking, can you give a sort of a super brief? Because I know it's been a couple of years of like intense milestones and some incredible achievements by the OBIE. But if you could give sort of a real brief overview of what role I guess the OBIE plays and how instrumental it's been in terms of putting open banking on the map, if you like, in the UK.
Mm-hmm. So the OBIE was put together by the Competition and Markets Authority in the UK. And in a nutshell, OBIE oversees the open banking standards in the UK. So they establish the sort of technical standards that both ASPSPs, i.e. banks, and TPPs, fintechs in the UK, abide by. So when banks and fintechs integrate their APIs together, oftentimes in the UK market, they're using the open banking standards to do that.
Cool, yeah. So this is cool, and just for everyone's reference, if you don't know your PISPs from the AISPs and all sorts of stuff, we'll try and refer to them as banks and fintechs. Makes things a lot easier. Cool, and I guess some of the milestones and some of the products and services that have been built on open banking have been based on, let's say, an 18-month or nigh on now 2-year, 2.5 year, maybe even roadmap. Where are we now from an open banking perspective? Because there's been a lot of talk, and there was initially a lot of talk around the I guess account aggregation type services, but the data that really gives you a fixed position of where your finances are. But there hasn't necessarily been so much talk around the payments and the payments functionality that open banking can facilitate. And I guess this is obviously more on that side. So do you want to give a little bit of a current state of play before we go into the detail?
Yeah, so I mean, trying to avoid three-letter acronyms here, but open banking, or more broadly PSD2, actually, which is ultimately the underlying regulation that sort of governs all of this open banking stuff. PSD2 has sort of two types of third-party providers, or two roles that third-party providers can play. One is AIS and one is PIS, or AISP and PISP, and that's account information service provider or payment initiation service provider.
Nice.
And essentially, those two sort of categories and roles have been afforded through the open banking standards. Open banking has obviously, as you say, sort of focused a lot on the data side, so on the AIS side, account information side. But actually, there's been payment initiation APIs as well. Those tend to be for a category of payments that's referred to as single immediate payments. So that would be, for example, you would, if you were a merchant looking to take a bank transfer from a customer, and you had a PISP license, you could send the customer back to their banking app with a payment that's sort of pre-filled in for you. They authenticate it, and then the bank transfer is made. So that single immediate payment journey is actually already part of the open banking standard. It's mandated in the UK. There are countless organizations using this now in the real world. But what we're talking about here is something called VRP, which is somewhat of a sort of holy grail in terms of open banking payments. And this is a type of payment that essentially allows these third parties to be able to, or PISPs specifically, to be able to instruct payments, but without having to sort of defer back to the bank to authenticate each payment. So it's used in much the same way as a direct debit might be used to take your, to take your billing every month for your whatever it is, whether it's your electricity or gas or what have you. And it can be used for all sorts of other use cases as well. For example, one-click payments on Amazon is another classic example of a user experience that under VRP would be a model that would be finally possible under open banking.
Cool. Yeah, I was just going to say, is there to sort of bring this to life, I guess, a little bit before we get into the detail in terms of who it benefits, I guess, and who it doesn't benefit. But is there a couple of, because the consultation paper lists out a whole bunch of examples in the background of where this type of payment can help. Some people might say, well, that's just like kind of what happens on a direct debit at the moment, or well, I can do that just via the card networks at the moment, and we'll talk about that in a sec. But there are a couple of examples which are actually quite specific to this, and the sweeping one is probably one of the ones which gives, I suppose, that layer of intelligence for this type of payment over and above, sort of regular payments that people might use day in, day out. Do you want to talk a little bit about that specific use case and how that might help, I suppose, vulnerable customers, but just general Joe public do their banking better, if you like?
Yeah, so I guess before I jump into sweeping, I guess I briefly went over what VRP is. So variable recurring payments is a completely sort of new way of making payments using bank APIs. And essentially what it does is it allows a customer to connect their bank account to a third-party service, a regulated third party, so that third party is able to make payments on their behalf. And that's a really sort of key part of VRP conceptually. It means that a customer is able to sort of delegate that responsibility to a regulated third party. When it comes to sweeping, sweeping is effectively a category of use case that depends on automated payments. So sweeping is the automated movement of funds on behalf of a customer between two accounts in their name. So you could think of a service that, for example, help customers avoid unnecessary fees by moving money between all their accounts to make sure they don't go overdrawn. You could think of services that would automatically move money into savings accounts so that people make the most amount of interest possible, all that kind of stuff, right? Like those kind of automated movement of money on behalf of customers in order to help them avoid fees and get better savings rates.
So is this the this isn't on the script, but is this the end of overdrafts?
Well, I'm not sure it's the end of overdrafts. I'm not sure it's the end of credit. I think the concept of sweeping as a sort of set of services, which isn't necessarily tied to open banking. I mean, you mentioned it's actually possible to build sweeping services using debit cards. It's possible to use build sweeping services using direct debit. The challenge is that the cost and the customer experience associated with using those existing payment methods is somewhat lacking. Cards, for example, can be quite expensive for service providers in order to be able to move money around for customers. Direct debits tend to have slow what are called settlement and clearing times. Essentially, the money moves relatively slowly, which can make estimating the amount that needs to be moved quite challenging. And so what we've done in the report is sort of take a look at how open banking can afford sweeping in the UK market, whether or not the existing payment methods are suitable and nothing needs to happen, and we can stick with just the account information and data side of open banking, or whether or not variable recurring payments and creating a form of kind of standardized access for third parties to be able to effectively get customer accounts to be able to move money on their behalf. And the sweeping paper that we've written comes to the conclusion on balance actually that a form of sweeping access under VRP would be hugely beneficial to service providers and ultimately to end consumers as well, because it will reduce the cost of providing those services, as well as open up a whole host of new customer experiences that previously weren't possible.
Yeah, because it's interesting. I mean, if you throw back to banks 3-4 years ago, I suppose the majority of them were trying to figure out how they can enact behavior change within their customers to be able to move money between accounts. Generally, their own estate of accounts, I would say, not necessarily out of the bank. But that aside, very much, within the context of being beneficial to the customer, because they were accruing quite large debt on, and therefore quite large interest payments when they potentially didn't need to, and it was down to perceived, I don't know, not necessarily customer laziness, but communication and things like that. So this is really really exciting in terms of being able to easily set up those mechanisms and then give a customer just the opportunity to, whether they know it or not, in fact, just to be able to move their money.
Right, and putting it in the competitive space as well. So allowing fintech to sort of step into this space, which is it's a nascent market of opportunity in terms of product design, and I think this is one place where fintechs really shine is in this ability to go from sort of 0 to 1 to sort of create new categories of product. I think this is an area where fintechs really shine, and so the idea of the sweeping access is to kind of open this up so that customers and fintechs can build these relationships, fintechs can build these propositions on behalf of customers, and the ecosystem can move forwards on that basis.
Cool. We have had a question in from Michael Clark. He's asked, what is VRP? Well, we've kind of addressed that, but then how does this allow things like Amazon one-click payment to become more common? So I think what is interesting around this is both, I suppose, what Amazon one-click is at the moment in terms of, sort of around I don't want to get too much into sort of authentication and things of that nature, but how it works at the moment. But then also, is this, I guess, a model that we're going to see, on a repeatable basis across many, many merchants who actually see the cost benefits of running, let's say, A2A payments?
Yeah, so I mean, the Amazon one-click example is just a good example of a situation where a third-party provider would want to retain connection to a bank account to be able to make payments on their behalf. It is possible to build this experience at the moment. I mean, obviously, Amazon one-click has existed for ages. The way that it's delivered is using the card system. So this is a type of card usage that's normally referred to as merchant-initiated transactions or card on file, or there's continuous payment authorities. There's lots of different names for them, but essentially it's where the retailer or some kind of merchant holds your kind of tokenized card on file and then instructs a payment on your behalf. So from a kind of customer experience point of view, it's very similar. The place where there's a significant difference, though, between card and even direct debit and VRP, is that VRP, when you grant consent to a third party to act on your behalf, that consent has a whole bunch of sort of limits on it, which are referred to as, in the paper, are referred to as consent parameters. Now, consent parameters could be maximum per day, maximum per month. It could be total amount. It could be all sorts of things that constrain the way in which that consent can be used. And the key point being here is that these can be used both by the service providers so that they don't have a consent that potentially exposes them to lots of risk if they were, to make a mistake on behalf of the customer. And also from a customer's perspective, it provides them a lot of control and visibility as to how much sort of risk they want to take and how much responsibility they want to delegate to the service providers that they're interacting with. So I think this is a really, really important difference between cards and direct debit and other types of continuous payment authorities that have existed in the market so far, is that these consent parameters, these limits that you provide on these explicit consents that you give to the third parties are able to actually provide a pretty tight control that gives you as the customer a lot of reassurance about the third parties that you're giving these types of permissions to.
And I guess just on that, and we'll just touch on a little bit deeper into consents at the moment. Who owns those consents? So at the moment, it's owned by the third parties, I guess. But what does that enable the third parties to do, and how much, I guess, because people have always talked about open banking in terms of this is great, but is there are security issues, and there's been a lot of focus obviously on SCA and the integration of SCA into the customer journeys that we've seen. But from a consents perspective, that almost seems like a whole other box in terms of is there a possibility actually, because of even the nature of VRP, that you could end up with multiple consents with multiple different providers, and suddenly you're kind of like, crikey, I can't remember which consents I've given to whom. And is there, I guess, is there therefore a way to manage that?
Yeah, so that's a great question. So again, this actually is something that customers already deal with using the card system. So if you ever create a subscription with Spotify and with Amazon and you cancel your card, that cancels your card across all of those subscriptions. You have to reconnect them. But the other thing that's a problem with the card scheme is that, theoretically, I think through the card scheme now, it is possible for a customer to get an idea of all the card on file, all the card and file setups that you have with merchants on the card networks. However, in practice, there's no sort of visibility over that that's available to a customer in the app, for example. So one of the things that's a part of the open banking standard on VRP is what's called the access dashboard. Now, the access dashboard is something that your bank will provide to you under open banking. This already exists. And then when you provide an open banking consent, which could be for data account information services, or it could be for VRP, it could be a long-held consent that was granted for VRP. Those consents are held in a dashboard where you can review them, you can look at the parameters that are on them, and then you can revoke those. You can revoke that access on an individual basis. Cool. So this is another part of sort of transparency and control, where VRP really moves the needle for consumers, is because essentially it is very similar in terms of the nature of the relationship with these third parties that you're providing the access to. The real difference is that these consents give you much more control and visibility as to essentially what's being done with those permissions that you're granting people.
Cool. Yeah, I've got two ways to go now. One is around the costs, but I'll leave that for a second. I just wanted to talk about the security bit, which is getting into sort of the granularity a little bit. So we won't stay at it for too long. But what's really interesting around this is that the user journey for the A2A payments up to this point has always been around the reauthentication for every payment required, and this obviously VRP sets a way, via the consent mechanism, to be able to change, obviously a variable amount, but also not have to re-authenticate every time you make a payment. I guess what that might leave some of the skeptics to say is that actually, well, is there going to be, a risk in that? Is there, who's going to be liable? Is there anyone sitting in the middle of an A2A payment in the same way, let's say, that Visa and MasterCard and the schemes sit in between a card payment that's acting as a recourse in case something goes wrong, or if there's something like a refund or whatever required. In terms of that's quite a lot in that question, but I guess I guess that concept of authentication and then recourse. How have you thought about that within this consultation paper, and you personally, given your role at Curl, how do you want that to transpire, I guess?
Yeah, that's a great question. The VRP paper itself does lay out some of the details on these issues in more kind of technical, not technical as in a sort of like codey way, technical in terms of a financial point of view. So it talks a little bit to the types of risk and the types of risk control that are available under VRP activities. But the broadest possible answer to the question that you asked me, which was quite broad,
sorry.
The broadest answer is the central entity that you mentioned. So in the card schemes, that central entity obviously is the scheme itself. Under VRP, that entity is the third-party provider. So third-party providers are regulated financial institutions. They have to get a license from the FCA, and then there's continual oversight and supervision of them by the regulator. And the regulator, the FCA in the UK, has something called the Principles for Business. These are sort of, several points. I think there's 11 principles. I think that's the right number. 11 principles that basically guide any regulated financial institution in decisions that they make about the activity that they engage in. And a large part of those obligations are ensuring that consumers are adequately protected for the types of propositions that are afforded to them. And so a key part of VRP is that these institutions, these PISPs, fintechs, whichever word we want to use for them, these institutions that get access to be able to, connect to your account, to be able to make payments on your behalf, they are regulated financial institutions. They have a direct license with the FCA. They have to have, they have to put together an application. It's reviewed by the FCA. They have to be granted, and all of the security infrastructure in open banking requires that they go through the licensing process. So it is impossible for any entity to access a bank's open banking API unless that third party has a license and has a digital certificate which enables them to send and receive requests and interact with customers' accounts. So it is a highly secure ecosystem that is underpinned by the oversight of the Financial Conduct Authority in the UK, and it is extremely robust. I mean, you mentioned, for my job, I work on, payments, infrastructure, bank APIs, security, and I can say with certainty that the structure that's been put together under open banking is second to none. There's a whole host of security safeguards that are in place from an infrastructure point of view, which mean that actually consumers are fairly well protected.
Cool. Let's talk a little bit about costs and adoption. So one of the things that everyone was, again, super excited about when A2A payments became a thing was the fact that obviously you wouldn't have to pay interchange scheme fees, and a lot of commercial clients, obviously corporate clients, were looking at that. I guess, given some of the issues of adoption have generally been because of something like this, VRP wasn't in existence up to now. And, it is worth saying that open banking is only about 3 years old, really. So it's, still very nascent and immature as a regulation or as a technology. Do you see this being something or the thing, I guess, that will unlock customer adoption, but really emanating, I guess, from the adoption of commercial and corporate entities? So I'm thinking, those who have enormous web traffic, who make a lot of cards payments on file, a lot of online payments. If they switch to this, they're going to save a fortune, right? In theory, and now you've potentially got the ability to do it.
Right. So I think it's an interesting question. So just to be completely clear, what open banking have provided is a standard for this type of activity called variable recurring payments, which defines a little bit of how the customer experience works when you're granting and negotiating consent with the customer. And it provides some technical specifications about what the actual underlying interface that the program, as you talked to, looks like. That is an optional standard. Sweeping is a form of access that open banking is looking at mandating the CMA9 provide to PISPs through that variable recurring payments VRP standard. Now, the reason that I mentioned that is because the use case that you mentioned, for example, e-commerce payments, there is no obligation for any of the banks to provide access for those use cases. So there's a standard for it, but there's no obligation for the banks. So that level of access can be established once banks have VRP APIs, but that the terms of that access will be defined under contract, which could be either a bilateral contract between the third-party provider and the ASPSP, or it's possible for banks and fintechs to get together and create all sorts of multilateral frameworks with contracts in place that provide that access. But the point being that these APIs won't necessarily, at least for the time being, be free for non-sweeping activities. Whether the access for sweeping, however, is aiming at providing a kind of open access for PISPs to move money on customers' behalf that has a very similar cost structure to single immediate payments, where ultimately, if there's no cost to the customer to instruct the payment, then there's no cost to the TPP. Cool.
Okay, fine. Got it. Let's move on a little bit. I guess just coming back, I suppose, to the use cases slightly. Again, just by virtue of, I guess, your day job rather than your job for the OBIE, What use cases in particular do you think VRP and sweeping could unlock? And in the same way that we saw when open banking started, I guess a wave of, and it was all about the AIS type data points, and we saw a wave of propositions and your ability to see all your accounts in one place and all that sort of great stuff. Do you see a similar wave of functionality occurring from the fintechs once the consultation paper is over? We could talk about the timelines in a minute, and if so, what do you think it might be?
Yeah, so the place that I see the biggest amount of opportunity to create a giant step change from the existing consumer payment rail, which is cards and card on file, it is in the space of e-commerce transactions. So if you think about making an e-commerce payment these days, you have to type in your card details. Okay, you might have it saved in your browser, so it fills it in for you. But if it's a non-trivial amount, it's likely that your bank will then take you through 3D Secure, which is the process you have to go through in order to authenticate each individual payment. Now, this is a very frictionful experience, considering we're in 2020. The fact that you have to type in a bunch of numbers, and those numbers are sensitive information as well, so you have to trust the website you're sticking those sensitive numbers into. This really is a quite poor user experience. In fact, it's not even quite a poor experience, it's a terrible user experience. So where I think VRP has the opportunity to sort of open up and deliver the most value is in those customer not present online type payments, because if a PISP is able to kind of hold that token to be able to make payments on your behalf, but the PISP wants to, on an individual basis, make sure you authenticate it, they could take you through a journey, for example, like on the Curl network, where you have a username, you're checking out online, you type in your username, and then that sends a request to pay to your mobile phone. Now, that is a bit like getting a bill in your restaurant, except it pops up immediately on your phone. But the point being that you don't have to give anything sensitive to the merchant at all. All you have to tell them is what your username, your identity is on the network, and then they send you a request to make a payment. You immediately just authorize it using, Touch ID or Face ID, whatever kind of biometrics you have on a phone. It cryptographically signs the transaction on your phone's hardware, which is super secure, and it allows for a way for us to, not only improve the user experience dramatically, but also reduce the levels of fraud, because as a customer, you're not having to type in sensitive information, which has to go into some website that could be a phishing attack, or it could be anything. So it really, I think those customer not present transactions online are really the sweet spot for where that type of VRP access could really move the needle for everyone, not just consumers, but also the financial ecosystem as a whole.
Yeah, and do you see, I guess, in the short term at least, that kind of using that, I guess, two-factor authenticate, because you're using your phone in theory to authenticate yourself? Do you see that from I guess from a customer numbers perspective, something that's rising at the moment, or do you think that actually there's so much security on these types of payments and so many, I suppose, checkpoints that you need to go through that actually that's going to stifle the journey? So I guess I'm kind of wondering the flexibility that VRP provides in terms of actually, fulfilling a payment. In your mind, do you think there's still too many risk controls that can be put in place in order to execute a payment, or do you think actually you're going to get the kind of experience you want?
Yeah, well, I'm not sure I would describe it as too many. So I think one of the things that's interesting is, given the sort of ubiquity of high assurance smartphones, so this is like hardware that has cryptographic technology built into it. Your phone has if you have an iPhone, it has something called Secure Enclave, which is extremely secure, physically secure private key storage. And the specifics of private key don't really matter that much, but essentially your phone is able to attest for you when you want something to happen. So you can put a digital signature right off your phone onto any kind of action that you would want to take, and payments is a good example of that. So I guess where I'm going with that is, it's not really about reducing the amount of control. In some ways, it's actually increasing the amount of control. It's making payments safer, which is reducing the overall risk, which reduces the costs, which makes it cheaper for merchants and cheaper for consumers. The bit where I think on top of that we can also improve is on just the underlying customer experience. So I think there's sort of the idea that if you remove some of that ceremony from a card payment use case, for example, that somehow you're more exposed to risk, is, I think, a little bit of a falsehood. And in fact, most of the reasons that the payments look the way they do is to do with market forces and power dynamics in the finance industry that open banking, in its sort of by its nature opening things up, I think both seeks to and is successfully achieving to impact change on.
Cool. We've got another question. Dexter Owoemi, I hope I've got that pronunciation right. He asked, what incentives are there for banks to implement VRP when institutions are still struggling to implement mandatory APIs? Although the success rate now on APIs are actually still pretty good now, but and two, UK banks still face changes in the ecosystem, e.g., EIDAS certificates.
Mm-hmm. Yeah. So I mean, let's. So the EIDAS discussion is like whole kettle of fish. Maybe let's skip over that. If you want to talk to someone about that, don't talk to me. I haven't been directly involved in it. I'm aware of it. It is obviously a problem. It's all tied up in a whole bunch of political stuff around Brexit. Yeah, it's not good, but I think it's a slightly tangential to the stuff around VRP. So I'll just park that to one side if that's all right. But the first point, which was about the incentives of the CMA9. So this is one of the reasons why sweeping and VRP, even though they're actually separate things, are so tightly coupled together from an open banking perspective. So what we've done is we've created an optional standard, but the sweeping evaluation, which is a separate roadmap item A10 to be specific, is basically an evaluation that we've done that looks at how open banking can and should afford sweeping in the market. And the conclusion that it comes to is that the CMA9 should provide a VRP API with access for that sweeping activity. So although the standard itself is optional, the sweeping access that's part of the conclusion of the sweeping consultation will effectively mandate the implementation of that VRP standard, if that makes sense, which is I know it's a sort of a strange way of structuring it, but it ultimately it boils down to what the remit of open banking is, which is to very strictly deliver what's called the CMA order, which is effectively the document that the CMA put together, which provides in quite official language what the scope of open banking's activity is and should be. And open banking, at least in its activity as a sort of standards body, can't and shouldn't really reach beyond that for the time being. And sweeping was one of the things that was actually captured in the order, which is why there's so much focus on it.
Yeah, I think it comes back to a holistic point that banks should, as they maybe haven't done yet, or are just starting to do, look at open banking as an opportunity for discretionary propositions rather than as a mandatory implementation, even though, and as we've known over the past few years, that mandatory implementation is big and costly. We've only got a couple of minutes left. I just wanted to move on to one thing, talking logistics and admin, everyone's favorite topics. But when does this consultation process start, and when are you expecting to get the results in from the industry? And then there's obviously some analysis, and when are we going to see potentially actually some changes to an implementation of some of the recommendations?
Yes, the consultation process has started. It started last week on the 9th. The 2 consultation papers were delivered, as were the API specifications and the customer experience guidelines. So those are the sort of 4 primary documents. As a sort of call to action, I strongly encourage everyone to provide a formal response to those consultation papers, regardless of whether you care about VRP or about sweeping. Please do have a look at the response. Maybe we could provide a link afterwards in the show notes or something, but there is a link on the open banking website, which is a landing page, which has a link to the consultation papers and all the other API standards bits. And it also has a link to the sort of submission form that people can use to provide a formal response. It's very important that we have formal responses, not just from the usual suspects, from the big financial institutions, but also from, third-party providers, whether they're regulated or whether you're someone who's just considering building a sweeping business. So if you're listening to us talk about VRP, talk about that sweeping access, and you're thinking, hey, I could build a proposition on top of that, you should consider yourself someone who has a stake in this and should provide formal
Yeah.
response to the consultation. And the more detail we get from people on that, the better, really.
Yeah, I have to say some of the consultation papers coming out of the OBIE and the FCA recently have been really, really interesting. So if you're in the industry and you are interested in sort of getting your point across, it is worthwhile having a look. Even at sort of the ones that have been issued over the past year, some of them have been really interesting. This one I think takes the cake for me anyway. But I've got, but I'm a big fan of open banking. With fintech, we're just nerding out right now. But anyway, look, I've got
the deadline, by the way, is the 4th of December. So I didn't add that on. So the deadline is the 4th of December, at least for the first sort of phase of responses.
Cool. Okay, fine. Look, we've got to close the show. Hannah, the producer's going mad at me because she thinks we're going to carry on all night, which, to be honest, I probably could do. I've got a whole raft of other questions, but anyway, I've got to close it somewhere. That was amazing. Thanks so much, Mike. Where can people find out more about yourself personally if they want to contact you via any channel that you prefer?
Yeah, so if they type into LinkedIn, Mike Kelly Curl, CURL, or you just go onto Twitter, Mike Kelly 85. You can catch me there, or send me an email, mike@curl.app.
Cool, awesome. For everyone watching at the moment, don't miss our other show, Spotlight. That goes live on Thursdays at 3:30 GMT, and then 10:30 AM ET. If you're watching in the States. This week we're joined by Peter Ramsey, who's the founder for Build for Mars, which is awesome. If you've ever looked at that and seen some of the UX and UI descriptions and comparisons that he does online, really, really interesting stuff. So make sure that you watch that. And just before you go, we wanted to tell you about our brand new competition, where you and your team can win a free 11FS Pulse license for the whole year. So 11FS Pulse, which is one of our products, gives you access to over 3,600 user journeys from more than 430 brands across the world, and that covers finance, fintech, and digital technology. Head to info.11fs.com/Pulse competition to get involved. Mike, thanks again. That was much appreciated. Really enjoyed that. And to everyone else, have a great week.
Thanks.